Thank you all again for joining. My name is Samuel and welcome to the Bedford Consulting webinar on zero-based budgeting in Anaplan. So what is zero-based budgeting? We all are familiar with the traditional budgeting, so our incremental budgeting that uses history as a base. Using run rates as a base, we look at our prior period numbers and then we justify the change, the increment, hence why it's typically called incremental budgeting as well. But with zero-based budgeting, we have no base. So there's a zero base. And the mindset here is that we will justify everything. So not just the additional pieces, the increments or the changes, we are justifying everything regardless of how long that cost has existed. We would want to be able to justify its existence for the next period or for the forecasted or budgeted period. So the key focus in zero-based budgeting is that everything will need to be justified. Every cost, every revenue stream, every investment that we have will need to be justified through this process. So in terms of the pros and cons, the pros are that we can highlight unnecessary spending, and that of course is a given. Because of the nature of what we're doing, going through everything with a fine-tooth comb, naturally we would shine a spotlight on anything that was unwarranted or unneeded. We maximize budget holder accountability. And again, because of the nature of justifying every single item in that budget, the budget holder is going to have a reason for putting that piece of the budget forward and of course get approval on that spend. And as a result, it maximizes budget holder accountability because of the detail that the budget holder would have to go into. And these combined would potentially significantly reduce cost. And that, of course, is one of the key goals in any budget process. So the pros are there and make a strong case for adopting zero-based budgeting. But the cons, one of the key cons, one of the biggest, are that it's time consuming. And of course it is. It goes into more detail, if you like, than your traditional budget. And because of that extra detail that you have to go into, as you would expect, it's going to take that much longer. Not just in terms of the budget holders and the people that are putting forward the budget, submitting the budget for approval, but also in terms of the approvers. They're having to go through a lot more because everything is having to be validated. It's uncertain that there will be a material benefit from this additional investment of time and effort and so on. And that, of course, is a risk with any new process. And hopefully when we look at the Anaplan solution, we can start to look at mitigating some of these risks. But that is a realistic risk that has to be considered when taking on any new process, specifically in this case, zero-based budgeting. There's no guarantee that zero-based budgeting is going to give you a materially different budget than you would have had if you did traditional or otherwise. And there is also an argument that zero-based budgeting has a short-term focus. So it looks at short-term cost savings at the expense of long-term gain or long-term benefit. Again, it's the nature of what zero-based budgeting is, but the way that you apply it and the way that you bring it into your organization is of course up to you. And hopefully with the Anaplan solution, you'll see that there are a number of ways that we can mitigate these risks and concerns. The Anaplan solution that we are looking at today in this webinar enables you to accept the fact that zero-based budgeting is very different in concept to traditional budgeting, and therefore you will want to transition gradually into that zero-based budgeting environment. The time-consuming nature of it is not just because of the effort that goes into it, but also because it's new to most organizations. For most people, they haven't done zero-based budgeting before. So when we consider the burden in terms of time and resource that a budgeting process is on a finance team anyway, if we then bring in a new budgeting process, of course, that would come with its own challenges. So being able to have a hybrid approach that uses an underlying or existing traditional budget, but has elements of zero-based budgeting within it, at least in the first instance, is really key. You need to be able to gradually transition, and Anaplan enables you to do that. So strategically selecting key areas to apply the zero-based budgeting approach is key. And that could be based on, for example, ease. So you may say that certain areas of your budget are easier to apply zero-based budgeting to, or it could be based on size. So you could say, let's just pick the main costs, the key cost contributors, the most material costs that we have. Let's look at zero-based budgeting on those, and for everything else, we would use a traditional or incremental budgeting approach. In Anaplan, that's something that we can do quite easily. So there doesn't need to be that hard transition from we're not doing traditional, we're now doing zero-based. We can gradually go into that. That easy combination of approaches in Anaplan gives rise to the gradual transition into zero-based budgeting, which of course is less disruptive to any finance team or wider organization. And it's achieved by utilizing the flexible modules in Anaplan. So whether your budgeting process is currently in Anaplan or not, you would be able to take the basis of that traditional budget and simply apply the zero-based budgeting concept of justification of each cost at its very lowest level. For the purpose of this demo, we're going to be focusing on marketing costs, software licenses, travel and expenses, and staff costs. And we're going to be applying the zero-based budgeting approach to these elements. But again, what's key to note is that this could be effectively an overlay on an existing traditional budget. We wouldn't need to be starting completely from scratch in a zero-based budgeting environment. It can be a transition that we would put in place gradually through Anaplan's flexibility. Moving into the product, you'll see here that we have a report, a page in Anaplan. And for those of you that are completely new to Anaplan, what we're looking at here is our user experience. So this is typically the way that when you log into Anaplan, it would look. You would sign in with your login credentials via any kind of internet access via the browser. And in doing so, we can see that we have our home page here, or our landing page, and our overview on zero-based budgeting. The 4 key areas that we said we would look at being software licenses, marketing, staff, travel and expenses, and we'll go into those in more detail in just a moment. But with that, the end is that we want to be able to view our integrated reporting summary. We want to be able to view all of the information in one place that is pulling up from that granular detail that we have with our zero-based budgeting approach through our marketing, salaries, and so on. So for everything that we're looking at today, it would be flowing into this total OPEX line. And within this total OPEX line, in this total OPEX number, is where we would then be able to start to drill in detail to understand what that number is made up of. And in doing so, we can of course see that when we drill down in more detail, we can start to see what this number is made up of. All the way down to its lowest level, we can see that it's made up of a miscellaneous, salaries and benefits, R&D, travel, marketing, and so on. And what we're going to be doing through this demonstration in this webinar is looking at how we build up those costs to get to this total OPEX line. But the key point from here is that in our integrated reporting, that input from those core areas would flow into our total OPEX, which of course would feed into the EBITDA and net income in our P&L, which in turn is linked to our balance sheet and cash flow in real time. Everything in Anaplan, of course, is happening in real time. Moving to our cost center summary, we can now start to see the breakdown of those costs to which we would want to apply our zero-based budgeting approach. If we begin at the top here in software licenses, we'll be able to work through each one and look at the way that we would apply zero-based budgeting to these cost elements. But some key things to point out, within each of the core groupings that we have, we can see our targets, our plans, our actual run rates, and any alerts that we may have in relation to top-down targets that may exist, especially if we are transitioning from a traditional budgeting environment. We can see a workflow here in terms of that which is in progress or completed, the actual run rate that would currently apply, giving us an indication of the spend to date, for example. some OPEX targets with any variances that are relevant to us, whether or not they've been reviewed, and of course the dimensions. So Anaplan is a connected planning platform that gives you multi-dimensional modeling capabilities. Those dimensions that we speak of are of course up here in our lists. So here we're looking specifically at London marketing, but we could be looking at any of these elements that we wanted to look at, whether it be a geographical hierarchy or whether it be a functional one. And we'll be able to work through all of these as we choose, based on the information that we want to see and based on the team within which we work. So firstly, looking at our software licenses. In here, the key focus, of course, is subscriptions. And within these subscriptions, the first thing is that we want to be adding in the new software that we have, that we would want to budget, or of course, existing software that we would need to justify to apply to the future periods. And in doing so, we want to look from the context that applies to us based on the function within the organization in which we work. So here we're looking from the concept of marketing, but of course we could be looking from any function, any cost center. So if we were to look at finance, we would see each of the relevant finance systems that might apply, existing systems that we would want to maybe continue and include in our budget. Here we'll be looking at the number of licenses, the payment terms, the annual amount of the contract or of the license, the start date, any end date based on contract term, and also, of course, the type of contract that we have in place. Its use would be key in our justification, and the type of contract is going to give us more information into where that would sit, which is going to help with our reporting later on, so we can start to group the different contracts that we have in terms of analysis at a later stage. Then we could look at our budgeted software contracts. So maybe they're not existing right now, but we have sign off for them. So we have approval in place, and then we can start to justify those and why they either may have differed to that which was budgeted, or just further justification as to what they're doing and how they're going to add value, return on investment if it's applicable, and of course that all important justification that we'd be inputting in text as need be in here as well. Then that would bring us down to our software costs, which would be based on the information that we've input above at a granular level. And these software costs are what are then going to be flowing through to our P&L. And of course, we can see the visuals below in terms of the way that they're set up. In this case, finance consisting of Concur and Xero in terms of the systems that it would be looking at. But if we look from a different perspective, for example, if we were to look at marketing, then of course it shifts so that we would now see the context of marketing in relation to those contracts that we have, those software licenses. So again, still in the same structure, still in the same way in terms of its layout, but the key difference here is that as an end user, I'm now maybe a marketing manager that's coming in to input my budget in relation to software contracts, whereas before I may have been a finance manager that was inputting my budget in relation to software. Here we can see a series of software that of software applications that we may require. We can see their uses, the contract types, as we said before, the contract term, and all of the other information, with a chart that's showing us how that looks in its entirety. And of course, all charts are interactive in Anaplan, so we can choose the way that we look at these charts and the way that we interact with them. But the key point from here is that for that which we're inputting within software licenses, we can see the cost that we have, we can see our actual run rate and any cost to date. And that, of course, is flowing in real time, as we've seen, into that integrated reporting summary, specifically in this case, into the total OPEX line in the P&L. So from there, we can move on to our salaries and benefits and take a quick look at our workforce planning. So here in the workforce planning, a similar type layout. So again, we're seeing our total OPEX so that we can see the contributor, if you like, of the workforce planning in relation to total OPEX. Again, we can see that we're in progress. So we've started this, but we haven't yet completed it. And we now would have the option to add in any employees or anything else that we require at this stage in terms of information about employees. So it may be that we're adding new employees, which of course we can do from here. And we can do all of this from the page. So we could now open a form as such and input the relevant parent in terms of where that employee would sit. We'd be able to say if it was a new role, what that role would be and where they would sit as well in terms of the hierarchy of that role, start date, that whether they're a contractor or whether they're permanent, a base salary override. The reason it's an override is because there is a default salary that is based on an assumption that's driven by the role in this example. Typically, this may be the case that you would drive a salary by role or maybe by grade, but ultimately we can use underlying assumptions to drive salaries, but we can also, of course, have any overrides that we would require. Then we would have any pension input. So we have different pension schemes that may be of relevance, and of course, the all-important FTE that's going to be the basis for driving that cost. And from there, we would have our entries. So we can see now each of the people that would exist, and we can see the cost that rolls up from that individual that, of course, will be flowing through to our P&L. On this side, we can see the GL breakdown. So from the base salary that we'd be putting in, we can then see the additional information in terms of the bonus, any commission, the retirement or any pension contribution, health insurance, NI, all of which rolls up into that, in this case, 770,000 nominal for salaries and benefits. That's what's going to be flowing through to our P&L in that integrated reporting summary. But this is the breakdown from its very lowest level. So from here, if we click on Tom Fraser, for example, we can see that it's showing us everything in relation to Tom Fraser and the costs that apply. So we would then need to justify this through the reasons. So in here, we would say maybe what it is that Tom Fraser does and the reason why we have him there and how he adds value and so on and so forth. And we'd be able to do that for either each team, if we wanted to do it at a rolled up level, or of course, we could do it right down to the most granular level. In this case, that of course would be employee. So you would have the option in Anaplan to work at an extremely granular level and have zero-based budgeting in relation to workforce planning, where you would be justifying every single member of a team. Or of course, you could roll that up and say that you'd now be looking by region or by cost center or by grouping or by function. You'd have complete flexibility in terms of the way that you would build those modules. From here, once we have this input, we can see that the data flows all the way through. So the employee expenses and the PL breakdown, the GL breakdown is driven by the person that we're clicking on. For Matthew Hardman, we can see the same. When we look at Donald Gardner, we see that it doesn't flow through. And the reason is because this hasn't been approved. So this is an example here of workflow in Anaplan, in that now somebody up the chain, so maybe my manager, would now see that I've input a certain amount. So if we were to take a specific area, so I've got London marketing here. If I take, for example, London finance, I can then look through and see if there are any that need to be approved. Everybody's approved in London finance. Let's take London IT, and we can see that we have Leona Clayton that isn't flowing through at the moment, a contractor. We'd then be able to go through to our approval section. So my manager would come in and see that Leona Clayton has been added. You can see that I've added them. There's an override here and there's an amount that needs to be signed off. If I'm happy with that, I can approve it here. And in doing so, on my end, because my manager has now approved it, Leona Clayton has been approved in real time, and now that cost does flow through. So an example here of how workflow can be applied within zero-based budgeting. This isn't specific to zero-based budgeting. It's a pretty standard Anaplan feature. Workflow is something that those of you that already use Anaplan will know is a really good feature for tracking that process and approving that process. For those of you that don't, this workflow can obviously apply to zero-based budgeting, but it can apply to many different processes in Anaplan as well. So that would then flow into our salaries and benefits line, and the salaries and benefits, of course, would flow into that total OPEX line that we were seeing in our P&L summary beforehand. Travel and expenses works in a similar way. So again, here we can see our run rate, or rather we can see our total OPEX. We can see that we're in progress. And the approach here is that we have global drivers for the type of travel. So in this case, we're looking at the travel element, and we can see the global drivers for that. So we can see the costs that are being assigned or have been approved as the driver for the costs in these areas. On this page, then, what we're able to do is to start to plan out that which is going to be of relevance to us and that which we want to include in the budget. So it may be that we want to create a new conference or a new event or a new driver, a new basis for the travel and expenditure planning. Or it could be that we're looking to adjust pieces that are already existing. So here we're looking at London finance as an area. So we're looking at London geographically, we're looking at finance as a function. And in that we have our CPX as an event, and we can say the date that that's going to apply, and then we can say what the expense might be in terms of the type. So we have a drop down in here to be able to choose from the different types that might be applicable. And as my internet tries to catch up, we can see that I have flights, accommodation, meals, transport, and so on. And these, of course, will be familiar to the items that we have over here. In terms of the amount, we can then start to input amounts if we want to have overrides or if we know specific amounts. Those, of course, will need to be justified, especially in a zero-based budgeting environment. But alternatively, it's going to be driven by these driver assumptions, these global driver assumptions. And these would be the basis so that pre-override, you would have this information here. And again, as is with zero-based budgeting, the key focus being on justification or reasons for everything. We would then have the reason that would be inputting from here. So we'll be able to now come through and input a reason in relation to flights as to why we've changed this global driver. We can see the prior year as reference. Really, in a zero-based budgeting environment, that really purely would be just for reference. It wouldn't be a basis. We wouldn't be able to say, of course, well, flights, we think they'll be £1,000 because they were £1,000 last year. It would need to be based on something more concrete in terms of the provider that we plan on using and a quotation that they've given us, and maybe the volume of flights that we expect to be taking based on the activity that we expect to be doing and what the return for that activity would be. So it goes into that level of detail. But the key point being that in Anaplan, we'd be able to build all of that here and have access to that in terms of customizing modules to adjust to the processes that we want to use. So then in looking at the drivers, we can see the department headcount, and of course we're looking by month. And then we can start to input the number of trips that we believe to be relevant. In here, looking at March 21, I'll just scroll my page down a little bit so you can see the chart below. We have a breakdown here across each of the items that we have within travel. And looking at March 21, we've got our 4 trips. So March 21, of course, being down here. If we were to say that instead of 4 trips, we actually think it would be 8 trips, we would then see that March 21 would change accordingly. So for the changes that or the inputs that we have above, those inputs are, of course, changing in real time and being reflected in the charts. And of course, we can then start to make our own amendments to the charts so that we can look at them in the context that is most important to us because of their dynamic nature. The T&E expenses that we're seeing here that, of course, is driving the chart is going to be flowing through to the total OPEX. And that total OPEX is, of course, the account that we're seeing in the P&L when we're looking at that integrated reporting summary. And finally, here we have our marketing expense. So again, within our marketing expense, we typically would look at this from the perspective of marketing. But of course, we may want to look at a marketing expense in relation to other cost centers. And as a result, we always have this dimension that means that we can cut data in different ways, pretty much in as many ways as your data will allow. And in this case, we're looking at it through this organizational hierarchy that looks at location and function. But of course, you could have as many of these pages as you wanted with as many dimensions as relevant to you. This being the organizational hierarchy, the other option that we have here is in terms of the section of marketing that we're going to be looking at. So the key focus here, and of course we have some text here on what the purpose of the dashboard is, but the key focus here is that within public relations, we want to be able to create all of the marketing items that we deem relevant and that we want to budget for. And ultimately, this is what is going to roll up into that public relations budget. That public relations budget is what we're then seeing down here in terms of public relations, and we're seeing it in comparison to each of the other sections. So branding, conferences, advertising, and so on. And then within that, we can see a breakdown by category here in the waterfall so that we have an illustrative view of what that looks like. And the waterfall that we see here is in relation to the breakdown within public relations. The donut chart that we see here is the parental breakdown or the parental comparison that we can see. So adding new items is nice and easy as per all of the pages that we have in Anaplan, we can click a button here that would create a new item in this group. So we would simply say on public relations, we wanted to create an item. We would then click create the item. We would choose the parent into which it would go, and we would say, for example, that's to go into public relations. And we would then say, you know, whatever that might be, a new marketing activity, for example, and we would hit submit, and that would then, of course, pull through and create new marketing activity. And then against that new marketing activity, we would then input our costs of whatever we believe they might be. So let's just say this one's not a particularly expensive one. So we'll input that at 500 each month, and we can just input that like so. In doing so, it's instantly updated here, new marketing activity, and we have our 6,000 for the year. Of course, that's rolling up into public relations, which we will see added into this number here. The 270 that we have over here, the 270,000 is the 270,000 that we have here, and it of course includes the 6,000 that we've just added. But most importantly is the justification. So for that new marketing activity, we would be saying that we want to input whatever it was as justification for that new marketing activity. And that, of course, is separate to each of the other items that we have. So as I'm clicking through each of these, this is changing to show us the commentary that we have in relation to each of those. Now that, of course, was in relation to the public relations. But if we were to take, for example, advertising, then we would see the relevant items in relation to advertising. So everything would update accordingly. And here we can now see the key advertising elements that we have. In this case, we have a sales campaign at roughly 6,000 a month. We've got some Google AdWords, for example. If we click on Google, we can see the commentary that would relate to that, Google AdWords, XYZ, and we can see the 10,000 a month that we've input for that. We can see, for example, some LinkedIn sponsored updates and the costs that may be applicable to those, and of course, Twitter and so on and so forth. And of the amount that we're looking at here in terms of the totals that we have, we can of course see that in comparison to that total OPEX that we're always considering. Now, one of the key points to note here is for everything that we're looking at, it's an example of the way that you may do things in Anaplan. It's not the only way that you can do things by any means. For every single report that we're looking at, for every page that we're looking at, such as the one that we're looking at now, and of course, all of the ones that we've seen up to now, they're all completely customizable. They start off as a blank page that you can do pretty much whatever you want to. In the back end, we have a model that could well be your existing model. So it could well be your existing traditional budget model, traditional forecasting model, incremental budget model. And of course, we can then start to build in those customized or tailored modules that would apply to zero-based budgeting in the way that we have done here. So just to bring it full circle, from this, we'll be able to then go back to that integrated reporting summary. And now, of course, we know how we get to this point, in that we would be inputting at those lowest levels, all of which we've seen today, putting into this total OPEX line with, of course, the breakdown that we've seen. So the reports that we see, such as here in terms of our outputs, will be updating in real time. They'll be pulling through from everything that we have input up to this point. The views that we have based on the pages and the summaries that we have are naturally aggregating through the lists that we have in the background. And the functionality that we have, again, is completely customizable based on the way that you would want to work. So while we have out-of-the-box solutions in the form of the App Hub and nice starting points, if you like, or reference points, ultimately everything that you would want to achieve based on whatever you may be doing in Excel or not able to do in Excel would be achievable, of course, in Anaplan. So as we draw to a close, I will just bring up our final slide in terms of our contact details. So for more information, do visit the website at bedfordconsulting.co.uk, or of course contact us on info@bedfordconsulting.com. I believe a link to the webinar, a link to this recording should be on the website as well in due time. So you'll be able to see it again there, or share it with any colleagues or friends as well. And we look forward to hearing from you on ZBB Solutions in Anaplan. Thanks for your time.